Meantime, shares of Realogy are on pace for their best day since April after the company reported its biggest third quarter on record with a 20% jump in revenue, nearly 30% growth in closed transaction volumes. The shares are up 16% right now, and the stock is up more than 400% from its March lows. Joining me is Ryan Schneider. He is president and CEO of Realogy Holdings, the parent company of Century 21, Coldwell Banker, and Sotheby's, among others. Welcome to you, and this is basically the busiest you've ever been, right?
Yes, absolutely. Kelly, thank you so much for having me. It's been a very interesting time with a lot of momentum in residential real estate, and for Realogy in particular, with both the top line and the bottom line results that you shared. And we're really excited by both what we're doing and what we're seeing in the housing market.
This morning, we got the pending home sales data that dipped a little bit, kind of like we've seen with new home sales in the past. And people are wondering, just how much the tight supply is going to limit how much more home sales can grow. So what are you guys doing? I mean, I wonder at some point if you're sticking flyers under people's doors or something to say, hey, if you're looking to sell your house, now would be a pretty good time.
Well, I think that's actually happening in terms of organic sales being driven in the sense of, while inventory is low, Kelly, supply is up, right? There are more transactions being done now substantially than there were a year ago. And after years of being stuck at about 5 to 5.5 million unit transactions in this country for literally close to a decade, we're now on pace for over 6 million. So there is actually more supply out there trading. It's trading rapidly. And so there's not a lot building up in inventory. But, our October numbers, the open transactions, which are new listings or new contracts being signed, our open transactions are up by more than 25%. We're seeing a lot of momentum still out there in the market, driven by a number of social changes vis-a-vis COVID that you mentioned in your last segment.
Ryan, I'm curious, as COVID spreads and affects your agents on the ground and just the way that you guys are doing business, is that going to have a negative impact? So obviously there's a huge tailwind from people who want homes and who are relocating, but is the fact that the virus itself is so widespread, is that going to create problems for you business-wise?
Well, COVID has been just an incredibly challenging thing for all of us, and real estate's not immune to that. I was so proud of our agents through the second quarter when they and our company and other companies went to great efforts to get a lot of transactions done safely for customers, not just on the agent side, but how we close title and mortgages, for example. Look, at the moment, we're actually benefiting a lot as a housing market from the social changes COVID's driving. We are seeing real flight from urban to suburban markets. It's showing up in the numbers. We're seeing rotation within within suburban markets as people want different houses as they do work from home. And we're also seeing an acceleration of people getting to those attractive tax and weather geographies even faster than they already were, including second home purchases. All three of those things, unfortunately driven by COVID, but just the reality we live in, are actually accelerating housing sales, and the supply has been going up as the higher number of transactions is showing.
One final question, because you did mention taxes, and there have been a lot of changes on that front the last few years, both federally and at the state level. Even here in New Jersey, I mean, they've retroactively imposed some taxes as a result of the pandemic. So, in that sense, is the election a catalyst one way or the other for business, or is kind of tax policy in general one of the main drivers here?
Pre-COVID, tax policy was a big driver. You saw it in a number of the Northeast geographies, and as part of the reason there was some already ongoing flight to more attractive, tax and weather destinations. But what we have seen during COVID is that ongoing tax kind of flight has been accelerated by the social trends that I just mentioned. And so we're rooting for pro-housing administrations of any type. But absolutely there have been in the past, and unfortunately maybe in the future, more tax headwinds on housing in some geographies. But from our company standpoint, we benefit with a very large Florida and Texas business if there is going to be migration from one part of the country to another, as an example.
Shepard Smith here. Thanks for watching CNBC on YouTube.